Howdy, folks. Let's talk about something generally totally uninteresting and mostly ignored and important. And it's what happens to your financial planning if you're sick or injured and unable to work. In the industry, it's called disability insurance. But what it's really about is protecting your income in the event of some sort of health catastrophe of one kind or another. And it might be full disability or partial. And as a high wage earner, let's take a look at some of the math. Now, I'm not going to go through all the statistics. Suffice it to say, you can easily find that via Google. And I think you'll be surprised that disability occurs more often than you might think. And most of them are partial. Nonetheless, let's look at the financial math for you. You're earning $400,000 a year. You have an employer plan that covers 60% of your base comp and very likely none of your bonus comp or equity comp. Chances are also good that it's got a cap of something like $10,000 a month. It might be $20,000 a month. The $10,000 a month is where the real disaster occurs. So you become fully disabled. Your compensation goes from $400,000 a year to $120,000 a year. And that 120 is very likely taxable because your employer is probably taking a tax deduction for the insurance premiums, which makes the benefit taxable. So you just took a $280,000 a year pay cut. With a $20,000 a year, $20,000 a month cap, or if it just covers 60% of your base comp, you're at $240 and you've taken a $160,000 a year pay cut. Now, out of that reduced pay, you also need to save for the day when that benefit runs out, and it typically runs out at full retirement age, which for most of you is 67 years old. So you still need to save for the point in time when you are no longer earning a wage, even if that wage is from disability insurance. So you can see why we think it's important that you model this into whatever financial planning you're doing, and that you think about the consequences of being disabled, even if it's partial. Let's just say that you're 30%, that you have a 30% disability. Well, your plan is still going to pay out a max of 60% of your comp, not 70, and it still might hit the cap. You still have an issue because theoretically at 70% capability, you could at least earn 280, but that's not where the math is going to come out. It's worth taking a look at least occasionally, to know where you stand. I hope this is useful. If there's something you want us to cover, please let us know. See you next time.